Hey everyone, thank you for being here today. Because if your Social Security retirement, SSDI, or SSI benefits are being deposited into a bank account, what I'm about to explain could have a direct and ongoing impact on your money. This isn't a small technical update or a minor banking tweak. This is something happening quietly across the country, affecting millions of people who rely on their monthly benefits to survive. And if you're not paying close attention, these changes can slowly drain your account month after month without you even realizing it. I want you to understand something right from the start. This is not about panic, and it's not about fear. This is about awareness and protection. Banks are making changes, and those changes are not designed with Social Security beneficiaries in mind. They are designed to increase profits, and unfortunately, people living on fixed incomes are often the ones hit the hardest. That's why it's so important you stay with me through this entire video, because what we're talking about today affects your wallet directly. Before we go any further, I want to hear from you. Think about your bank for a moment. Do you like them? Do you feel respected as a customer? Do you feel like they value your business? Or do you feel like you're constantly being charged, nickel and dimed, and pushed into fees you never agreed to? Some people have great experiences with their banks, and others absolutely cannot stand them. I personally have more than one bank account, and my feelings about them are very different. One is fine, nothing special, but acceptable. The other one, honestly, I wouldn't recommend to anyone. So tell me your experience. Are you happy with your bank, or do you dread dealing with them every time you look at your statement? If you're new here, welcome. I focus on breaking down Social Security, SSDI, SSI, government benefits, and money-related issues in plain, everyday language. No confusing jargon, no corporate spin, and no sugarcoating. Just real talk about real issues that affect people living on fixed incomes and tight budgets. Today we're talking about banking changes that are already happening and will continue to roll out, and I want to make sure you're not caught off guard. Here's why this matters so much. Once most people set up direct deposit with Social Security, they don't touch it again. You link your bank account, confirm everything is working, and then you leave it alone. It becomes automatic. Your benefit hits your account every month, bills get paid, groceries get bought, and life goes on. And that's exactly how it should be. But banks are now forcing people to pay attention again because the rules are changing, and ignoring those changes can cost you real money every single month. This affects retirees living on Social Security, people receiving SSDI due to disabilities, SSI recipients with very limited income, caregivers managing benefits for family members, parents handling SSI for children, and anyone whose primary or only income comes from federal benefits. Whether you're receiving $900 a month or $2,000 a month, these banking changes don't discriminate. In fact, the lower your balance tends to be, the harder these changes hit. Let's talk about what's actually happening. One of the biggest shifts happening right now is the quiet elimination of truly free checking and savings accounts. For years, many banks advertised free checking or no-fee accounts, and for a lot of people, that was the obvious choice. Why would anyone want to pay just to store their own money? Paying a monthly fee simply to have a bank account has always felt ridiculous to me, and I know many of you feel the same way. Now, banks across the country are phasing out these free options. In many cases, they are automatically converting existing free accounts into paid accounts unless customers take action. We're talking about monthly fees of $5, $10, $15, sometimes even $20 or more. That might not sound like much to someone earning a high salary, but to someone living on Social Security, that is groceries, medication, gas, or utilities. Think about it realistically. If you keep a small balance in your account, maybe $50 or $100 most of the time, why would you pay $10 or $15 a month just to keep that account open? That money doesn't benefit you. It benefits the bank. And the worst part is that many people don't even realize the change has happened until they notice their balance shrinking faster than usual. Another major change is the elimination of no minimum balance accounts. For a long time, many banks allowed customers to keep any balance they wanted without penalty. Whether you had $10 or $1,000, it didn't matter. That flexibility is incredibly important for people living on benefits because your income is limited and predictable, and most of it goes right back out to cover basic living expenses. Now, banks are increasingly requiring minimum balances. Sometimes it's $100, sometimes it's $500, sometimes it's $1,000 or more. If your balance drops below that required amount, you are charged a fee. And here's the part that really doesn't make sense for beneficiaries. If your monthly benefit is around $1,000, how are you supposed to keep $1,000 sitting in your account untouched? That money is meant to be used for rent, food, utilities, medical expenses, and transportation. What banks are effectively saying is this: keep money you don't have in your account, or we'll charge you for using your own funds. And if you do what you're supposed to do, which is use your benefits to survive, you're punished with fees. This system is not built for people on fixed incomes, and yet those are the people being hit the hardest. Then there are paper statement fees. This one really frustrates me. Many banks now charge $3 to $5 a month just to send you a paper statement. When you break down the actual cost, it doesn't add up. Paper, ink, envelope, postage, maybe under $1 total. Yet customers are charged several dollars every month for something that used to be standard. Multiply that by thousands or even millions of customers, and you can see why banks love this fee. For some people, paper statements are important, especially seniors who don't use computers or smartphones. There is absolutely nothing wrong with that, but charging people extra just to access their own account information is another example of banks shifting costs onto customers who can least afford it. Another quiet change happening is the removal of small perks that once benefited seniors and long-term customers. Some banks used to offer slightly higher interest rates for seniors, recognizing that retirees often rely on savings to supplement their income. These interest rate bonuses were never huge, but they were a gesture of goodwill. Now, many of these perks are disappearing. Interest rates are being reduced, or senior-specific benefits are being eliminated altogether. You might think, it's only a few cents a month, who cares? But it's not just about the money. It's about the message. Banks are showing that they are willing to squeeze every possible dollar, even if it comes from people living on limited income. And when you add all of these changes together, the impact becomes very real. Let's do the math. A $10 monthly account fee, a $5 paper statement fee, a minimum balance fee here and there. Suddenly, you're losing $20 or more every month. Over a year, that's $240 or more gone. That's money that should be going toward your needs, not padding a bank's profit margins. The good news is that you are not powerless in this situation. You have options, and taking action now can protect your benefits and stop these fees before they pile up. One option many people overlook is credit unions. Credit unions are member-owned, not profit-driven in the same way big banks are. They often offer truly free checking accounts, no minimum balances, and fewer fees overall. Many credit unions are far more understanding of people who live on government benefits and fixed incomes. Another option is the Direct Express card. This is a prepaid debit card specifically designed for federal benefit recipients. There are no monthly fees, no minimum balance requirements, and no credit checks. It's built for people who receive Social Security, SSI, or SSDI, and want a simple way to access their money without worrying about bank fees. You can also take steps right now with your existing bank. Call them. Ask direct questions. Is your account being converted to a paid account? Are there new minimum balance requirements? What fees are you currently being charged? Do they offer any accounts specifically for Social Security recipients? Take notes. Write down names, dates, and details. If possible, ask for written confirmation. One of the easiest immediate steps you can take is opting out of paper statements. Switch to electronic statements if you can. It's fast, free, and eliminates an unnecessary monthly fee. You can also set up balance alerts so you're notified if your account drops below a certain amount, helping you avoid surprise fees. I strongly encourage you to review your bank statements from the last few months. Look closely at every fee. Many people are shocked when they actually add them up. Those small charges add up quickly, and once you see the total, it becomes clear why taking action matters. If your bank is unwilling to work with you or insists on charging fees you can't avoid, start researching alternatives. Talk to other beneficiaries. Ask what banks or credit unions they use. Just make sure that if you decide to switch, you update your direct deposit information with Social Security properly to avoid any delays or missed payments. I know this is frustrating. Living on a fixed income is already challenging enough. You shouldn't have to fight just to keep access to your own money. But remember this, banks need customers. You do not owe them loyalty if they are costing you money you can't afford to lose. You deserve to be treated with respect, and you deserve financial stability. If this information helped you, please take a moment to like the video, subscribe to the channel, and share this with anyone you know who receives Social Security, SSDI, or SSI. The more people who know about these changes, the better we can all protect ourselves. Thank you so much for watching, and I'll continue to keep you updated on anything that affects your benefits and your money.